Hey, Bigger Pockets, it's Matt. So today I want to talk to you guys about raising private money and more importantly, where the first round of private money normally comes from, right? So everybody wants to raise money from investors, and the fact of the matter is, to raise money from investors, you have to have a track record set up. This is like the catch 22 of real estate investing. So you have to have a track record set up of properties that you've already done, and you can show investors, listen, I actually know what I'm doing, and I can make money in real estate. See, look at these projects I've done, these fix and flips or these rentals. They're all making money and stuff like that. But the problem is that you may not have enough cash in your own pocket to do all those deals, and so you may have to go to people that trust and like you without actually seeing a track record, which was probably going to be family members. So can be investing with family can be an uncomfortable space sometimes. But at the end of the day, if your family members like and trust you, they may be willing to invest with you regardless of your track record in real estate. So that's how we got started. And that was our first investor was several rounds through family members and then through immediate friends, and then we took it out from there once we had built a track record that was provable, proven concept and whatnot on top, right? So what you may have to do is to go to people that like and trust you to invest with you, your immediate family. So I want to give you guys some things you have to do when you invest with family in real estate, because it can be a gray area. It can be something where it's like, well, they're my family, they trust me, they'll just give me the money. Well, you should be careful with that. And so here are a few ground rules for investing with family with my general commentary around them. So number one, you put everything in writing, okay? And so that maybe goes without saying, but I also have seen people that have done everything from leasing property to family, and they didn't draw up a lease, and then that went sour. And for investment loans, it would go the same way, or investment equity or loans for people that are putting money into your business. You want to put it in writing just as you would money coming from anyone else. Disregard the fact that it's family for documenting the loan coming in. So put together loan agreements, put together collateral, mortgage documents, and give them a lien on the property if that's the case. And if it's an equity, set up an agreement, an LLC or whatever the type of investment it is. Properly document it in writing, because just A, you never know. B, like we one of our first investments came from my wife's father, and what if something happened to him? Geez, I hate to say that. It's a horrible thing to say, right? But what if something happens and that loan is memorialized through the documents that we had? And that's the same thing would happen for you guys, because you never know. You never know what could happen, and you want to have that loan in writing or whatever it is, so that you can get handed down if, God forbid, something happened to you or to the other person, so they can get taken care of. Now, obviously, you would do that if it wasn't a family member, so there's no reason why you wouldn't do it if it was. You got to put a different hat on and treat them obviously with respect as to your family members, but also treat them as now a lender or a business partner. And I'm sure you put it in writing if it wasn't a family member. So second thing is have an exit strategy. So I think that it's important to be able to know how you're going to get your family and tell them out of the loan. Now, they may not be concerned with, oh, it's okay, we trust you, and you're going to do great, and we believe in you, and we love this real estate thing and all that, so don't worry about it, keep it for as long as you want. Well, that people rarely say that forever. At some point, they're going to want it back. And so I would document the exit strategy on, okay, we're going to hold it for this long. We're going to do this with the money, and it's going to get out like this, and put that in writing too. Because again, the whole thing about maybe other family members may need to know about this. You should tell, like if this is like a parent of yours, you should tell your siblings that you're doing this, because they should know about it. And there should be the exit strategy should be in these documents that you write in on recommendation number 1 there, right? So that's number 2. Send regular updates. Don't just take the money and not ever let them know how it's doing or whatnot. Send them email or written updates, or just tell them like, hey, that property we own together is going well, or that loan that you gave me for that fix and flip sure is going great. Or God forbid, it's not going great. Here's what's happening. Here's what I need to tell you. In that. So you might have to have that conversation with family members, which, be prepared to have that about, like, hey, listen, it's not going great. Here's what I'm going to do. Here's how I'm going to fix it. Right. So, so send regular updates, good or bad, however they're doing. Now, this is something that I've seen people do, this next one. I've seen people not do this one, and this can really bite you. And that's have a detailed plan in place. So there are many people that I've met that have had family members come to them and say, "Hey, Johnny, I see you're investing in real estate. I love that. I want an alternative place to money. I've got this $100,000 just sitting here. I'm just going to give it to you." And Johnny just takes it without saying, okay, well, I'm going to put it into this project, or I'm going to go out and buy a rental property with it, and here are the addresses, and this is how much ownership I'm going to give of the rental properties or loan interest rate or whatever. They just take the money and run off and do stuff in real estate with it. And it could be nice to have that kind of money, but without having a written plan, you're running around with a weapon of mass destruction of money that is obviously somebody else's and your family members who like and trust you and all those things. But without a written plan on your side, you're putting your family members' money at risk unnecessarily. And also, you should give them a copy of that plan too. But for yourself, have a detailed written plan in place so you don't go do something silly with their money just because they want to give it to you and because they trust you, right? Um, the last one is start small. Do like even if this is like your first or second or third or fourth deal, start small enough to where you can prove the concept to yourself and to your family member that you can do it, and then build up from there. Don't if somebody wants to give you a large sum of money, don't just run out and buy an apartment building if you don't know anything about running apartment buildings. Most people I know that own large assets like that, even people that grew up really quick, own a few small assets and then they went out and bought a really big one if that's what they wanted to do to prove the concept, right? So start small and don't bite off any more than you can chew. And bottom line here, guys, this isn't a rule. This is just like something you should hold across the whole thing. Is treat them pretty much as you would another investor, like someone off the, someone that's doing a business relationship with you, not a family member. You have to forget that they're a family member to a degree. Don't forget that it's your family member, but you have to treat them as you would somebody else. And if you can remember to do that, everything else I just listed should fall into place. And here they are, very quick. Put everything in writing. Have an exit strategy. Send regular updates. Have a detailed plan in place. And don't bite off more than you can chew. You can do if you do those 5 things, my hope is you will take great care of your family members and you can build up that track record so that you can go out and solicit larger investors and work with more people and build your business and it gets bigger and bigger and bigger. And if your family members are happy, they can go on the ride along and make money along with you, which is the intention, is to benefit more people from this great business that you're involved in of real estate. So obviously leave some comments and questions below. Love to hear from you folks that got started investing with family. Would love to hear from you down below. Any of your stories, good or bad, or other rules of engagement that you have in working with family. Let's get some chatter going. Love to hear from you guys. So thanks as always for watching this, and I hope you guys have a great and profitable week. Bye bye.